This week, GB Capital went from -2% to plus 0.5% in a single day, and we also crossed 5 figures in assets under management. But that's only part of the story. Here's everything that happened this week. Welcome to the first GB Capital Weekly. If you are new here, GB Capital is a systematic trading and investment brand that we are building based on our trading model that we have been developing throughout the last few years. And here we will be documenting the entire journey publicly. The trades, the performance, the assets under management, the challenges, and everything happening behind the scenes. The long-term goal is to build towards $100 million in assets under management. And this is week 1. This week we took 10 trades, 6 winners, 4 losers. We finished the week at plus 0.92%, and the biggest contributor was on first day, and let me show you that trade right now. So right here, this is first day, August 20. Right here, as you can see, we have the volume profile drawn out until NYSE, so 9:30 a.m. Eastern Standard Time. And what we saw is we tried to short first with NY session, but then basically rejected from this previous week high. Okay, so this was the previous week's high, but we were already very bullish on the higher time frame. So now let me explain why we took this long. Right here, as you can see, we are right at the value area low of this entire day. And what do we get from there? A 5-minute manipulation candle. That's the entry. And then right here around 4,501 was the exit, totaling a 1 to 3.8 risk to reward ratio. This was the biggest contributor with a 2.5% return. By the way, guys, if you want to see all the trade recaps with a lot of details, just join our GB Capital Telegram channel. Everything is there for free. And if you want to use the same broker that we are using as GB Capital, check out the link in the description, and we also have some gifts for you. And our biggest losing day was on Tuesday, but we stuck to the risk management and we only lost 0.9% on that day. And now let me show you the most interesting day of the week, which was Friday. So right here on Friday, we had a massive push to the upside during the Asian and London sessions. So we were expecting retracement into this low volume node right here. And we tried to short this move, but taken out for a break even. With NYSE, price printed another 5-minute bearish manipulation candle from the point of control inside that low volume node. We took that setup as a short and basically got trapped immediately right away, resulting in a bear trap, which also indicator identifies right here. And then what we did is we dropped down to the 3-minute and took a long position off of that bear trap on the 3-minute time frame. So right here, just let me show you if you don't know already, this is the bear trap right here, the bearish manipulation candle getting trapped by this bullish candle. So this was the second setup on that day. And right here, we got another 3-minute manipulation candle, and we used that specific setup as a continuation move. So we trailed our stops to this low and entered another position on this 3-minute MC, totaling the risk to a complete 1R. And as you can see, it got stopped out pretty quickly. And the most interesting thing is right now is you have to imagine we are at -2% on the day. And we as professionals, we have to stick to risk management. We cannot get emotional, etc. And if you are a beginner and watching this, I can completely understand if you get emotional after 2 consecutive losses, but we have risk management protocols that we must follow regardless of the circumstances. So now looking at the 5-minute time frame, we can see that the bear trap is still in play. Yes, price is playing around, but as you can see, we get another 5-minute manipulation candle right here with the new 1-hour open. Yes, we did take a loss here on the long, but the bias is still long right here because this was the make or break area. If buyers can protect price with inside this low volume node, then it just means that price is most likely going to retest at least the highs at the key level 4,600. So then what we did is we entered the long of the 3-minute time frame right here, only risking 0.5%. Since we have lost already 2% on the day, the third trade is a 0.5% 1% risk. And pretty much the same exact setup, the point of control and also the key level of 45.80. So now price printed another 3-minute MC, pretty much just like this previous scale-in setup. So basically we call them continuation setups. Okay, and we did the exact same thing right here, entered another scale-in position, but look from where the MC is printing, almost from our entry price. Okay, so basically this first position is risk-free at this point, right? The stop loss is dragged to this low, and now we are able to risk the 0.5% on this setup. So right here we have still 0.5% at risk, but are now in with 2 positions. And right here we start to trail. Why? Because this was the target, right? So these highs right here were our targets. And when our targets are hit, what do? We don't just exit the trade right away. What we do is we trail our stops. And look why the stop trailing was so important. So right here at this price point, 45.98.6 was our trail stop already hit. But look what happened after that. It would have hit the stop loss. Yes, risk management is very, very important, but trade management is important as well. So now we are back at minus 1% on the day. So we basically made 2R on this setup. So we are still down 1% on the day. And price is now again back in this previous range and does not continue this bearish momentum to the downside. And look what happens right here. We print another 5-minute manipulation candle from the point of control once again, and that's our entry signal. So right here now, since we made 1% back on this previous setup, now we are able to risk another 1%, because worst case scenario we will end the day at negative 2%. Worst case scenario if this setup hits the stop loss, and we have enough range to the highs. And right now what we can target is the next key levels to the upside. So right here price is stalling a little bit, and with the new 1 hour we started to push slightly, but no real momentum yet. Right here we are already at break even. As soon as we hit the 4600 key level and our 1-to-1, our stops are moved to break even, so risk free. So now worst case scenario, we will end the day at negative 1%, or we will make some profits. After that, what we did is go down to the 3-minute time frame and just trail our stop as it moved, as gold was pushing to the upside. So at this point our stop loss is below this low, and now again below this low, and right here our stop loss got taken out at the price of 4607. And if you look at this right here, it was approximately a 1.5 risk reward setup, climbing us back up to 0.5% profit on the day. Since we risked 1%, we made 1.5% on this setup, resulting in an overall week of positive 0.92% on the week. As I said, if you want to see all the trades that we took, the link to the Telegram channel is in the description down below. And I just want to quickly talk about this loss that we took on that day, since it was also the biggest loss that we took so far. So maybe you would call it the worst trade, but for us, every single trade is an opportunity to learn, to improve. And what we saw here right on this trade was, yes, price had a lot of momentum. We trusted the momentum to continue to the downside. But let me show you something. The risk to reward to the first potential session low was at 0.8R, and that was actually against our rules, because we need at least a 1-to-1 risk reward, so enough range for price to move to our break-even point, which is at 1-to-1. And that was one fatal mistake on our side, and we have to be transparent with this as well. Mistakes can happen, but we have always room to improve, and this is one of them. Yes, the momentum, like if you look at this on the 1-minute time frame, you'll see that we pushed with a lot of momentum to the downside, and we trusted that momentum. But this is another example that you should maybe always trust your rules and always trust your playbook, because this was actually against our playbook. So let me just talk about what happens actually behind the scenes, just so you get an idea of how we operate as GB Capital, me and my brother. Every single day before the New York session starts, we do an entire daily analysis, what we want to see, which level levels we want to see to get tapped, and from where we are expecting reactions. So basically drawing our zones, buys, sells, invalidating also with criteria. The second step is we actually try to convince each other for a setup. So if Kadir tells me that there is an A+ setup, he has to convince me, and then we strategically allocate risk to that trade. If he doesn't convince me, we don't take it. And that's the beauty of having two traders in the team which have the same amount of experience and also are masters of their craft. And to be completely honest with you guys, in my honest opinion, this is the most important asset that we have inside GB Capital. Let me just give a brief example. One single trader can lose to his ego, can get emotional maybe, etc. But if you have two minds working with the same capital, that's not going to be the case, because then you look at everything from a very professional lens. Especially with GB Capital, we have a long-term view. We want to build this for years. We are really ambitious with this, and we really want to grow this to $100 million in assets under management. And yes, this is now the starting point. This is our first week, but I'm sure that we will get to that goal. So that's it for this week's GB Capital Weekly. We're still at the very beginning of this journey, and as I said, our goal is $100 million in assets under management, and we are going to document every single step along the way. If you want to follow the journey, make sure you subscribe to our channel, and if you want to learn more about GB Capital, the link to our Telegram channel is in the description. I'll see you next week.